Hello and welcome to all our viewers on CFO Insights. I am Sherry, a financial technology consultant at Hyperbots, and I'm very excited to have Jon Naseath here with me, who is an accomplished executive with expertise in AI, machine learning, and computer vision, driving impactful technology solutions in education, healthcare, and business. This interview explores how discrepancies arise between line item taxes and overall tax on invoices, how businesses handle these discrepancies, and how the implications for tax filing, especially when items are taxed at different rates or are exempt. So, to get started with the interview, John, can you explain why the overall tax amount on an invoice might differ from the sum of taxes calculated on each line item?
Sure. And your question is very kind of academic. It's just the math adding up that we'll see. But I first want to start just by saying any tax, when you say the word tax as a CFO or as a CPA, I got to say, I'm not giving tax advice. I'm just describing how the math adds up. And if anyone has any questions around how their tax filing should be done, talk to your own company's tax specialist. But the question here is really just in any time you have many line items and you're applying a percentage, like a tax application to a total whole number, you're going to end up with a long digit after the decimals, like more than 2 digits, right? And so that when you add all those things up, if you sum up all those rounded off numbers, you can end up with a higher, bigger number. I remember this happened all the time when we were preparing financial statements, and you add up all the sum of the totals, and then it ends up to a different number than the total. And it's really just because of rounding is one of the main reasons. So if you have different line items on an invoice and they have their own summed up total calculated tax requirement, and you add all those up to the total one or calculated based on the total, it could come up with a different number primarily because of rounding.
And to dive deeper into the topic, how do businesses typically handle rounding differences between line item tax totals and the overall tax amount?
Most companies use an ERP system, and it's actually calculated into that. It automatically sets up a rounding tolerance or an adjustment thresholds. And this feature allows small differences across the different numbers. So for example, if you added up all the line items and added up to 10.02, $10.02, the total might just be $10. But if you added up the sum pieces, it could be different. So systems manage that, and sometimes it shows up and you think it's an error, or someone's kind of like I've spent too many times chasing it, because you have to verify, is it really rounding or is it an error? There's also at the same time, I'll just call out fraud things where intentionally add on a penny or two at the end of anything and no one notices because I think it's just rounding. So it matters. It's just really just the rounding is every time I've found what it is. Well, I shouldn't say every time. I think I'm sure there was one or two times where it may have been an error somewhere in the calculation and it showed up in the rounding, but you got to chase it down.
And are there any regulatory requirements that mandate calculating taxes on the total invoice amount rather than individual line items?
It really just depends on the jurisdiction where you're at, especially when you're doing a global business. Yeah, I've done business in I think every region, most countries in the world. Okay, not the countries we're not allowed to, obviously, but many regions, especially in retail environments, whether it's online or not online, there's just different instances where you apply the tax. And then also you have to consider, are you applying discounts or rebates on the entire purchase or on a portion of it? It can be difficult. And usually the ERP systems go into it, but you just got to be aware of what those requirements are on a line item versus how it rolls up.
Could you also discuss how exemptions and special tax cases impact the overall tax on an invoice?
Yeah, I think for this, I'd want to also bring up kind of the broader context of tax. So especially in the US, there's a lot of talk right now around tariffs and putting tariffs on every other country's thing. Tariffs are really just another form of tax that's applied at different times. And with exemptions, I remember the last time Trump was in the presidency and he was going to put tariffs on everything, and it seemed almost like every other week he was changing what tariffs were on what items. And I specifically helped companies set up supply chain routes that intentionally, very appropriately, and according to tax laws, routed things a different way and unbundled things, and then did the finished goods in a certain country to bring into the US to avoid, tax avoidance is okay, but to make things non-taxable, to qualify officially for exemptions. And so really just, it can be complicated to stay aware of how things are changing and what tax rules are going to be applied. with a back to school scenario, it's possible that certain things are held exempt for school related items, perhaps, or there's it's kind of changing constantly, and so you have to monitor your products. Usually, a company's only selling like one or two products, and they know where they fit in those categories. But when you're doing large items or large quantity of items, you got to manage the different categories well.
And how does the tax calculation for line items and overall totals impact tax filing from a seller's perspective?
Well, just making sure you're accurately categorizing what products fit under what tax or, again, what tariff categories. Electronics could be different. I did business in India, and bringing products in from China, electronic developed products, is very painful. or shipping products into Brazil. They love to pile huge taxes on things, but really it depends on what the products are. I know, for example, India doesn't want to bring any children's toys in, anything that's like a plastic children's toy. It's just not worth it to ship it into India from China, as an example. The US, who knows what it's going to be like, right? We'll see in January when the new President-elect Trump comes in, and there's talk of him putting tariffs on everything. And it's again, it's just a tax, but your state or local taxes, I think things are going to be changing a lot. And so we need to monitor it. And I think this will be a big part of what CFOs and finance people, accounting, tax people are going to be working on next year, is the changing tax strategies.
How do ERP systems or other accounting tools help manage line item and overall tax discrepancies?
The question is, how do they do it? They only do it as well as they're programmed to do it. So if you put in garbage tax criteria and tax ratios, it's going to apply them to future ones. I'm sure that there's going to be a lot of fire drills later next year when companies realize that something changed and they didn't change it in their ERP system, and they're going to have to go do it. Now, how it does it is it's calculating it based on predefined rules. There's business rules, and it's identifying a certain product in a certain category, and then how does that map into the government's rules, and then it does all the calculations. So I'm sure it's going to calculate it accurately. You'll have to do your own control testing around your system testing to validate that. I'm sure there's going to be lots of auditors testing that next year, to the degree that it's material. Just calculates it. It'll do it for you if it's programmed correctly.
To help us understand this topic better, could you give us an example of when a seller might need to file taxes separately by category of items and why that's required?
One of the classic examples is in a grocery store. So they're selling food items and non-food items. And in many places, that food item could be exempt, while the non-food item isn't exempt. Again, going back to rules changing, I was reading an article the other day about what food items are going to be allowed for EBT cards, which is like the government provided funding for people who need it. Maybe those are taxed differently. So while filing taxes, the store needs to categorize and kind of bundle what are exempt and what are not, just based on however the products are that they're selling. Or I'd even argue how they're bundled, because I think if you package it differently, it could change the tax criteria.
And since AI is bringing about such a revolution in the domain of FP&A, I have to ask, what role can AI play in managing discrepancies between line item and overall tax calculations, especially when complex exemptions and rates are involved?
I think that AI there is going to be a double-edged sword for some people, because you can certainly use AI to understand quickly what tax exempt rules are changed. A lot of the AI search tools are now they're not just old historical data. It can get you a broad view of what's currently out there, but it might not be accurate, right? So you have to chase it back down to the real source. The other way that AI can be used more effectively, though, is I haven't seen a tool do this. I'm sure it's the fact that you're asking about it makes me think that you guys are thinking through it. So that's great. But this ability to understand what's changing, apply those business rules in an accurate way based on understanding what the product is, triangulating all the details about the product, I would argue wanting to find the most effective tax strategy for those products. And because sometimes one of the things can be it's the same product, but if you look at it this way, it qualifies as one thing. If you look at it another way, it qualifies as another. I think AI would be able to both do the accurate quantification, but also provide insights into strategy for feedback you could provide back to operations, even on ways to improve your gross margin or your tax impact, or basically things you could change on your product to align with updated tax strategies or things maybe they hadn't considered.
Thank you so much, John, for this conversation and for highlighting the complexities involved in managing taxes on invoices, particularly when line item taxes don't match the overall tax. It's very clear that handling these discrepancies accurately is essential not only for compliance, but also for smooth business operations.